We're speaking now with Glenn Wiggle. He is the partner with the financial guys, and he is a market expert. And the markets, Glenn, are plunging. The Dow is down 950 points, and I believe the NASDAQ down 2% because of the coronavirus.
Yeah, the markets are taking quite a hit today. As we speak right now, the markets are down about 800 and some points, about 2.8% of the Dow. Coronavirus is the reason. I think the concern, of course, is the disruption of national supply chains, international supply chains, and a slowdown in global economic activity as a result. But these are in our mind opportunities to take a look at your portfolio, potentially either reposition or take an opportunity to catch some stocks on sale. So we look at investing in the markets. We look at long term, of course, and you have to ask yourself, is this something that's going to be impacting the market and earnings, 3 to 5 years from now? Or is this something that's going to be relatively short-lived? And in our opinion, it's going to be relatively something short-lived that, is really an opportunity to take advantage of.
So you're talking about supply chains, and I understand that our pharmaceutical industry is going to be hit hard. That means we're not going to be able to get some drugs that we get from China in the next 3 to 4 weeks, and that is a problem.
It could be certainly a problem. I mean, you're talking about semiconductors, you're talking about potential drugs, as you mentioned. I mean, there's a lot of stuff that comes out of China that we consume in this country. So, there's going to be an impact, of course. The question would be what kind of impact or how big of the impact is the coronavirus really going to have? And again, in the long term, when you look at these types of events, and if you look back at history, typically these types of sell-offs present an opportunity, buying opportunity really, because again, they're not long-lived events. So will this spread? Will it go down a little bit further? Perhaps. Certainly our analysts have been looking at potentially a 5 to 8% correction. We're down maybe 4% here, so you certainly could have some more downside to go. But again, in the long term, we think that this dip is just nothing but more than a buying opportunity.
Okay, and it's now spread to Italy, so that's another fear. I guess the Fashion Week in Milan, they had to stream it live. They couldn't invite anybody there. So as it spreads to Europe, they are saying this could last through May because we don't have a vaccine. So you'd think it's going to be short-lived, but what if this thing stays around and gets worse?
Well, May is short-lived. I mean, we're already in almost March, right? So you're talking about a few months. So let's say the markets stay volatile for the next few months. You're going to get some down days like today. You're going to get some rebounds. You're going to get some back and forth action, and maybe the markets work their way lower over the next couple of months. But again, that still it's a pretty short term in the sense of the market and investing. And again, I think when people look at the stock market, oftentimes we tend to take a short term view and look at the news of the day and the day to day action. But really, when you look at those successful investors, the Warren Buffetts of the world, the folks that have really attained true wealth. They've taken opportunities like this and looked at it as an opportunity to reposition portfolios, looking to say, where's my portfolio? Where are these stocks going to be? And what are they going to be worth 5 to 6 to maybe even 8 to 10 years from now? And I think if you thought about it in that way, it certainly makes the volatility of the stock market seem a lot less extreme when you take that kind of long-term view.
So, financial expert Glenn Wiggle, with the stock market plunging because of the coronavirus, should we be panicked about our 401k?
Absolutely not. Never panic. I mean, what you really want to do is you want to assess, of course, your risk. If the volatility is more than something you can stomach and it's keeping you up at night, that might be, a signal that maybe you should take a look at your overall allocation. But you should always have a diversified portfolio. I always feel like a broken record because it seems like that's always the answer we give, but it's the truth. If you have a diversified portfolio and you've got some bonds, some real estate, some stocks, you don't have all of your money in the stock market. That gives you an opportunity to rebalance.
Yeah, but what if all you have is
in these kind of volatile markets?
What if all you have is a 401k?
Well, inside your 401k, every 401k should have different investment options, different asset classes. They should have large cap stocks, medium company size stocks. They should have international options, and certainly they should have bond options and stable options. So an average 401k for, let's say, a 50-year-old, if they're a moderate type of risk, might look like a 65 stock, 35 bond mix that, again, gives them the opportunity to trigger perhaps a rebalance or even up their contributions if they can.
I don't think anyone here who's in their 401k knows what their 401k has in it. That's horrible.
Right. Well, that's a problem. That is a huge problem. And unfortunately, in our industry, a lot of, I guess, plan administrators or sponsors, plan sponsors do a fairly inadequate job of coming out and really educating the employees when it comes to the 401k. It depends. I mean, 401ks are self-directed. So a 401k, you're going to have the option on what you want to pick.
Okay.
However, you may have a profit sharing that comes along with that, and oftentimes a profit sharing might be the investments in the profit sharing could be directed by the company itself. It just depends. Depends on what kind of plan you have.
All
But
right.
for the most part, most 401ks are self-directed. So you should have options, including allocation options, that you can just pick a portfolio that's already a basket of different asset classes.
Okay. Well, Glenn, thank you so much. We'll probably get back with you if this continues to slide. I appreciate it.
Awesome. Thank you, Karen. Appreciate it.
Bye.
All right. Thank you, Karen.